Hello, my name is Victor, and in today's video, I want to talk about 3 specific stocks that I think are a screaming buy here in the middle of 2026. These should be incredibly familiar if you're a subscriber here on the channel, but I also want to mention that every single one of these stocks has a forward PE ratio that is lower than the S&P 500 as of the time of this recording. But let's not waste any more time and talk about the very first stock here on the list, and that is going to be Netflix. But just before then, if you enjoy watching my videos, consider giving me a like and subscribing here to the channel because it helps me out tremendously. Also, I just want to highlight, I'm not taking all of the credit here, but Mexico is leader of their group here in the World Cup, so I am continuing to wear a Mexico jersey so long as El Tri is in the competition. But okay, back at the matter at hand, and that is going to be Netflix, which is currently trading for about $77 per share. Netflix has a trailing PE ratio of 25 and a forward PE ratio of 20. Now, I do want to highlight that these forward PE ratios run through the end of 2027. And in the case of Netflix stock specifically, they are down 14% compared to what the stock was trading at in early January. But besides trading at a cheaper forward PE ratio than the S&P 500, why exactly am I so bullish on Netflix stock through the end of 2027? Well, right off the bat for Netflix, I have 2 main reasons why I am so bullish on this stock, and that is because Netflix has incredibly high margins and their free cash flow is incredible compared to this time last year. When I had a look at Netflix's operating margin in 2025, I found that in Q1 of 2025, their operating margin was 31.7%. And when I had a look at Netflix's 10Q from Q1 of 2026, they had an operating margin of 32.3%, well above that 31.5% that the directors are trying to stay above. But what's even more impressive is just the amount of free cash flow that Netflix is able to keep on that balance sheet. In Q1 of 2025, Netflix had free cash flow of $2.66 billion. Already amazing in its own right. But fast forward just 1 year later, and Netflix had, at the end of Q1 of 2026, free cash flow well over $5 billion. Now, I do want to give a caveat that $2.8 billion of that was because of a termination fee that was owed to Netflix when the Paramount deal fell through. But if you ask me, that's just incredible business on the part of Netflix, because who else is getting almost $3 billion for doing absolutely nothing on their end? That was an amazing deal that only benefits Netflix, and they are able to use all of that capital now to focus on growth for the foreseeable future. And I am continuing to buy Netflix at these prices. I'm up to about 5% of what Netflix is in my personal portfolio, but I could easily double that and I would be absolutely fine with that because I am so bullish on Netflix over the next 3 to 5 years. I think we're gonna look back here in the next couple of years and think, wow, Netflix traded at 70 something dollars per share? That was insane. And in case you're interested on seeing my personal projections for Netflix, I'll be sure to leave a tag up here for you because I go way in depth on all of the numbers. So if that's something that you're interested in, be sure to check it out. The second stock that I want to talk about in today's video is ELF stock. Currently trading at about $64 per share. ELF has a trailing PE that is well over 140, but their forward PE is what really interests me for this stock because their forward PE, as of the middle of 2026, is looking at about 18. And as incredible as it sounds, the stock is down 26% compared to where they were at the beginning of the year back in January. And if you're paying attention, that means that ELF stock has a cheaper forward PE ratio than even Netflix. So that is incredible growth that is expected for the stock here in the next year and a half. And you know, when I really get to thinking about it, I get a strong sense of deja vu with ELF. And that's because just last year, something incredibly similar happened with the stock where ELF tumbled all the way down to under $50 per share. That was in April of 2025 when ELF hit their lowest price after tumbling from well over $200 per share. Just based off of all of the commentary that I was hearing for ELF online and, on CNBC and stuff, I was thinking that ELF was going to be down for at least a year, only for ELF to skyrocket in an absolute V-shaped recovery within the next couple of months. I mean, this was insane. Just have a look at this chart. ELF went from under $50 a share to jumping up to well above 25% by the end of September. But I'm starting to see some incredible momentum coming for this stock. You can already see here in the last week, I think ELF was up like over 30% over like 6 or 7 trading days. It was incredible. And this is what makes me think, in my opinion, that we might see another skyrocket in ELF stock just like we did last year. Because whenever ELF has this compressed forward PE, it just shoots off like a rocket out of the blue. But what really excites me about ELF stock through the end of 2027 is how much the board is focusing on the diversification of sourcing infrastructure from China. If you ask me, one of the biggest problems that ELF has is whenever there is even the slightest hint of any kind of geopolitical problems anywhere in the world, ELF tends to tumble. And that's because it's no secret, ELF has a lot of their products that are made in China and then imported to the United States. So whenever there's any kind of tariff or, any kind of conflict between the two countries, China and the United States, Wall Street tends to get spooked. But what I'm really happy to see, because as I was reading through their 10Q here in their most recent quarter, quote, they said, the company may also seek to shift production outside of China into regions where we expect tariffs to be lower and to source the same products in more than one region, to the extent it is possible and not cost prohibitive. I was personally really happy to read that in the most recent 10Q because at the very least the directors and the CEO is aware of the problem and they are making adjustments and pivoting to counteract that problem. Because yes, ELF, I've owned ELF now for many years in my portfolio, but it is incredibly volatile, again, anytime there's any kind of geopolitical risk. But if you are able to make the same products and the price isn't effective, as they mentioned, it is not cost prohibitive, why not diversify your outsourcing of your products a little bit? Why not have your products made exactly the same in another country? You can let me know what you think of ELF stock in the comments below, but for me, anything under $70 to $75 is a heavy buy in my portfolio. I'm thinking we might get to $100 by the end of the year for ELF if this momentum continues. But even then, I mean, considering that ELF used to be $200 per share, and they have been struggling recently because of all of the tariffs. Ever since tariffs happened, ELF has been struggling. I think that it's going to be short-term in nature, though. If we look out 3 to 5 years and tariffs are no longer a thing, personally, in my opinion, I think ELF could skyrocket back to that $200 price range it used to trade at just a couple of years ago. And last but definitely not least, we have stock number 3 here on my list, and that is going to be Meta. Currently trading at about $575 a share, Meta has a trailing PE at 21 and a forward PE, get this, Meta has a forward PE ratio of 16. Meta is down 10% since the beginning of the year, so it only seems to me like Meta has become an even stronger buy as the year has progressed. And I had talked about Meta extensively in my projections and expectations over the next couple of years. Again, I will leave a link up here if you're interested because I go into a deep dive into all of the numbers. But just know that in Q1 of 2026, Meta had advertising increase by over 30% on the top line. Absolutely amazing. None of the problems that Meta has are because of their fundamentals. It's only because of that CapEx spending that Wall Street is starting to get spooked because, to be fair, all of that is going to affect their earnings per share over the next several years. But is Meta slowing down when it comes to growth in advertising or in another category like their Meta Quest or AI glasses? No, they're not. And I've already talked about Meta and how much they are investing into AI as the future, but specifically in this video, I want to talk about how AI glasses is growing tremendously for the company. Because in their most recent quarter, Mark Zuckerberg actually brought this up and mentioned that the number of daily users for the AI glasses has tripled. That for me is incredibly exciting for a company like Meta because yes, they have been primarily known for their advertising. But now, what if over the next couple of years, let's say by the end of 2027, what if Meta starts becoming a hardware kind of company too that is just known for selling these AI glasses? I, for one, am really interested in getting a pair for myself. I have mentioned this in previous videos. I have just not gotten around to it. I need to do a little bit of research. I don't know if you're like me, but whenever I make a purchase that's like over $200, I like to make comparisons. I like to look at prices. And honestly, I might just wait until the end of the year because I like to get a good deal. And I know that the holidays are going to be here before we know it. But that is it for my list. These are the top 3 stocks that I am going to continue to buy through the end of 2026 because I am expecting a rebound in every single one of these companies by the end of next year. But I would love to know your opinion on all of these 3 stocks below. Do you agree with me that they are an absolute buy? And I would love to get any kind of rebuttals regarding any of my points. Or would you replace 1, 2, or all 3 of these stocks? And be sure to let me know what your replacement stock or stocks would be. And again, if you are a fan of the World Cup, please let me know where you're watching from and what team you're rooting for as we make our way here towards the end of the group stage. And as always, I'll catch you in the next one. Peace.